Welcome to the Mortgage Broker Podcast, tailor-made for Canadian mortgage industry professionals. Proudly presented by A Better Way Mortgage Group, this podcast is your trusted source for insider insights, market updates, and strategies to elevate your career in the ever-evolving world of mortgage brokering. Whether you're a seasoned broker with A Better Way Mortgage Group or an industry enthusiast looking to stay ahead, our episodes are designed to empower you with the knowledge and tools you need to excel in the Canadian mortgage space.
All right, we're back for another episode of the Mortgage Broker Podcast, and today we're continuing on with one of our favorite series, the Behind the Lender series. We've been trying to put this one together for a little bit now. Stephen Lang from VWR Capital, he is the National Sales Manager, so somebody that can certainly give us a lot of insight when it comes to just everything that's going on at VWR, the behind the scenes. But to start, we want to introduce Stephen. Thank you so much for joining the show. And yeah, looking forward to just getting into, your background, your professional journey, and most of all, VWR.
Perfect. Well, thanks for having me. So just because I can't grow facial hair, I have been in the industry quite a long time. So I did start in the credit union world, actually. So it gave me a lot of background into the relationship building, but also what I find most important in my journey was learning the business acumen of how businesses work, how people operate, and how to handle different situations that impact everybody within a process. So worked my way up there from a teller actually all the way to branch manager, then regional manager. I did oversee starting a new division for small business lending. Prospera got that off the ground. And then wealth management, a little bit of experience there. The broker world, actually years ago started in Sardis, just getting a few applications in, signing up in the branch, and then it exploded to we created a broker division at the credit union from that branch. So it gave me a lot of experience and exposure. And this opportunity at VWR was a fantastic one. It's given me an opportunity to grow with the business. It's very flexible, adapt, and really try to get ahead of the industry is one thing that we try to do. And so, so I oversee the business development managers throughout BC all the way through to Ontario. I also look after marketing. I would say a little bit of operations in there too. And yeah, excited to be here.
Awesome. You kind of touched it all, which clearly framed your experience and made you a good fit for the role that you have today. You mentioned wealth management when you were at the credit union. Have you found any of that side of your experience helped you when it comes to VWR and just running, a mortgage investment corporation?
Absolutely. Yeah. And I think wealth management has one of the best, I don't know how to put it, I guess cadences in their world as far as how to operate with relationships, build a book of business, mine that book of business, have support. So have your inside sales, you have your external salespeople from different companies, and ultimately everybody knows everybody. And it is a big driver of revenue as well for a credit union. So yeah, probably the biggest actually. So.
Yeah. I mean, it keeps the lights on. You got to have the funds to operate for sure. So, just looking at your professional journey, like what led you into the financial space in general? How'd you ultimately get to private lending and what you're doing now?
Well, it's a funny story. I didn't know a ton about private lending, to be honest. Knew a lot about the broker world, the alternate space. I actually did receive a phone call one day, which I typically don't pick up, but it was like, hey, did you build this position for me? Right? And I looked into it. I investigated kind of, and really with VWR, the company's been around forever, right? So it's reputation, longevity, and I talked to some people, and it really gave me a chance to grow the position and with the company and grow the position how I wanted, really test things out to see if I could back up all my experience and make it actually turn into something good for the company. So,
what's your progression been with VWR specifically? Did you start in this role and shape this role, or did you start at a lower role and kind of work your way up?
So starting this role, so title is a bit different. So I don't see title, to be honest with you, and I don't think we do in the company either. Starting the role. So there was a sales team, and they reported basically to the CEO. No offense to anybody, but I mean, support's tougher then, and you're kind of on your own. So it's kind of looking at that. We're over 30 years, the company was at about 390 million was where they maxed out at for assets under management. And that was 4.5 years ago. And we're closing in on 800 million today. So having the freedom to kind of grow and implement some pretty basic things into a company that is very successful, despite having nothing written down at the time, I've been able to grow. So I took on marketing as well. And marketing before, I used to just type an email and somebody would send me something. And then I was like, oh, we have to brand this business. We have to make ourselves known and operate in places that we really haven't before as well, such as Ontario. We didn't have presence there, a physical presence. So
rolling into, the overview and, just what differentiates VWR from an operations perspective, of course, like it's such a well-known brand. It's been around for so long. And I think from where I started to see the industry change was more around when the stress test came into play. And that was when we realized, as brokers at the time, we did a lot of private lending, realized, holy smokes, a lot of brokers don't even know this space, don't even know any lender, regardless of how big your brand was, because, they just focus and only did prime deals. And, fast forward to now, that's totally not the case. If you're not a broker doing really all types of the business, whether it's prime, alternative, private, you're not going to survive. So, now looking at where you are today, you just mentioned the massive growth from raising capital and the well-known brand within the broker community. What do you do to differentiate yourself within that mix of so many private lenders? And I mean, you look at a list of private lenders available in BC alone. I mean, it's gigantic to where it used to be.
Yeah, for sure. And differentiation is one piece where when I started, I was like, well, what are we good at? Yeah. What do we do? And you cannot be great at everything. And I think one of the challenges in credit unions and why you're seeing a lot of mergers today is they've tried to do everything for everybody, and then they duplicate services and all that. And at VWR was really honing in on what we're good at before we can go to something different or add more products. It's what are we known for? What do we do? What is our investor appetite? And really just hammer that home. So for us, it's a simple product. It's just a 1-year product. It is your traditional cookie cutter. I'll say this out loud, is we're a boring lender. And that's good. And it's good for our investors, especially this last year for investors. And everybody knows, hey, if there's something wrong with this property, VWR is probably not going to do it. And everything for us needs to fit onto a page for our policy. That's really consistency is key for us. So.
One thing I noticed where VWR really stood out was the no fee product that you've had for, years.
Low fee, but it is known as no fee.
Yeah. Low fee, true. But, that was, I think it ranges from around $750, right? And that was a big piece for brokers, especially when they started to learn that they had to, do private lending, and now they have to sell a fee, and that conversation's way different with a client that has to actually pay for this product. Do you find that is a big piece? Because there's not really many lenders that are doing that in the private channel.
Yeah, for sure. It's a huge piece. It actually varies by province as well, too. So we've started in BC. BC seems to be a rate and fee sensitive province. If you go to Ontario, when we started branching out there and marketing and having somebody physically there, our fees were by far the best in the market there. Oh, yeah. And they still are. And that's not the main concern out there. It's speed, and it's getting something done as quick as possible. And with that comes challenges, but we want to be consistent. Our fees, we do not want to gouge anybody. We don't want to end up in the news and be the ones that really put these people underwater. Fees have been the same forever, especially on a renewal too, right? I cringe when I see some of the fees out there, but we're here to help. We're not a long-term lender, but if you need to stay with us, we are. We're not going to penalize you for doing that either, right? So,
if we just look at the last couple of years in our industry in general, whether it's prime, alt, or private, the consumer sentiment has gotten more price focused, right? Dean and I have both been in the industry for 12 plus years, and I remember the first 8 years of our career, even prime, it was we just want to get the deal done, and it has to be relatively competitive. Nowadays, you see clients, consumers that are jumping from broker to bank or broker to broker for 5 bips, right? And I'm sure that is going to progress into the private space. Ultimately, it will, right? Especially when someone's not comfortable with that type of product, it's the first time they're getting a private mortgage. Everyone's going to be looking for a second opinion. So cost is important. I can't wrap my head around why Ontario is different, to be honest with you, but it's really interesting. And it's just, you have to have strong competitors like yourself in the industry to keep people at bay, I think, too, right?
I'll say this, in the private space, what we battle the most is perception. And perception is reality. Whether we're doing it or not, we have to combat that. Yeah. Right. So we have, and we will continue to hammer home our low fees, our renewal fee being low. And we're not going to bash anybody doing that, but we really want to bring attention to what we can offer and why it's good. And the fee is important. I would love everybody to sell based on APR. It's tough, right? If you look at APR, I would put us against anybody being one of the most fair lenders out there.
When you look at speed as being such an important piece, because it totally is, probably in every province, province, brokers are looking for a quick answer and ultimately coming here for typically a reason that requires speed. How do you battle that, especially in a busy time?
We were known for some speed years ago, and then when I came on board, I actually probably been responsible for rooting our speed in the industry, and that was on purpose in a way. It was like, let's break things, let's see what our capacity is to see what we need in a way. And I don't think it's just our industry for speed. I think it's our culture of North America basically, and everybody wants things yesterday. So what can we do to help with that? And so we've invested heavily in technology. We're still going through a lot of that, but we've implemented a guarantee of 24 hours to get you out of commitment now. So 24 business hours. Our next step is to work on how quickly can we review conditions, right? At the end of the day, we can do what's in our control. There's still a lot of pieces along the process that are in the broker's hands as well, too, that are controllable to ensure the quickest possible turnaround. There's cost, I'll say, as well, too. So sure, there's some lenders within 24 hours could fund a deal. What is the cost of that? Do we want to be in that space? And then you look at this type of market and fraud and compliance, and it's like, speed's important, but how fast?
Yeah.
Right?
I mean, I'd be curious to hear your thoughts. I know if I look at like myself as a broker, it's so relationship driven, right? Alt, prime, or private. And I know, everyone's always trying to find new brokers and get new brokers to work with you, but I can only imagine that you guys have a consistent kind of pot or pool of brokers that just consistently come back. And you're not going to be able to fund every deal, but is that kind of what you see internally?
Yes. And I mean, with us, our relationship having a partnership too, so you can really hone in on it and focus on it. Honestly, just our newsletter we send out monthly, I have over 8,000 names. No offense, I can't handle dealing with 8,000 people. And when we send a newsletter and we have a very high open rate, like close to 60%, it's a challenge for a few days, right? Sure. So really honing in people, we want to understand your business as a broker, as a brokerage, and then also the other way is understanding our business. We are not a fit for everybody, and we are quick to get to know as well, so you can move on. We'll recommend you somebody as well if you want. But the relationship piece is becoming more and more important, and especially educating the broker as far as what private lending is, what we can offer, and also if there is another offer that they have, to let them know some of the things to look out for or questions to ask first before taking a borrower there.
I mean, and that's a big piece in relationship. And I think like when we look at the BDMs in the other channels, whether it's prime or alternative, the ones that really excel are the ones that, give brokers quick feedback. They know their product and then they recommend somebody else. That just builds the trust in like the relationship, and that broker can go back to that BDM as a first option, or, looking at VWR as a first option and be like, hey, like, does this work? No, it doesn't. Here's why. Here's where to go to. So you keep getting those first calls, which I think is just going to continue to, have better quality files within your book. Maybe moving on to like current market trends and insights, where do you see things going? What are the major trends that are impacting your business and the vision of VWR?
Yeah, so I know this is going to be a strange answer, but we always try to stay a bit ahead, and we are looking for things in a way to bring us down so that we can be ahead. It's weird to say, but there's a lot of regulations, there's a lot of new things, and coming from the credit union space, I can see they're all little pieces of what we're at the credit union. So some of the regulations as far as your suspicious transaction reports, all that type of reporting. Is it needed? Sure. Have we done some of that before? Do we have processes in place already? We did, right? So it's really being ahead of those. And we've been involved in a lot of the processes as far as building courses, helping with feedback on some of the regulations. So that's kind of how we're staying on top of it. And our staff, we license all of our staff as well too, just to ensure that everybody here is by the book, right?
Yeah. I mean, that's a big piece. That's kind of similar to our approach with, all the changes, is just trying to be ahead of it, implementing processes, before rules have even come into play. I mean, we're looking at that now with BCFSA and some of the changes that are coming next year. Now I'm curious to see like our borrower profiles changing within your portfolio. And largely when private lending really started to take off, it was a self-employed client, maybe credit was challenged. Like, are you seeing that change, and what are those changes starting to look like?
Yeah, so our profile is, It's similar. However, the struggle with mortgage payments is really coming through, right? So, I mean, if you take a $900,000 private mortgage at, I mean, a year ago, you're at 10%. Yeah, you can see some challenges if something's happened in their life. Now, that's why we're a fairly conservative lender too, and the equity is in the home. So how do we help them get to a position of either selling or moving through this? But overall, I mean, we're still seeing the self-employed. The one other piece is developers right now too, is a big trend. So cash flow, I think, is a little tight on the developer side. With sales low, you see a lot of inquiries from builders, developers trying to get through that one house that's left in a subdivision or the few houses that aren't selling, right?
Right. That's interesting. So those would be like homes that are complete that they just can't sell, because you guys don't really play in the construction space, right?
We do not.
Yeah, that's interesting. It makes a lot of sense. And, just as a broker, anyone with those types of contacts, like that could be a good solution to, provide some flexibility for, potential business.
What about the developer side, but on resale, pre-sales? I mean, I know Ontario, Toronto specifically has a big issue with values coming in well under purchase price. We're starting to see more and more of that in BC. Are you guys seeing a lot of inquiries because of that?
Yes, the condo market specifically is very challenging. So you could probably see that coming a little beforehand as far as number of listings. I was actually in Toronto and I just walked the streets where all the condos are down there. And then I saw these signs and I looked at the wall and I'm like, okay. And then what I noticed, and this is just real life stuff versus data, is there was nobody walking around. And it was like a Friday night downtown Toronto. And I'm like, this is a little weird. I felt differently before when I was down here. But you have to back that up with data for sure. But for us, being a short-term lender, we will look at these things, but at a lower loan to value, right? Yeah. So, because it's going to take longer to sell. It's going to cost us more to sell if something happened and they didn't pay, right? Yeah.
Yeah, and that's kind of, rolls into my next question, is just like guidelines tightening. Like that's an example of, okay, like maybe we used to do 70% loan to value, but, it's something a lot lower now on that type of a product. Like, I mean, I'm assuming that's the case. And where else do you look to potentially tighten guidelines or make changes like that?
We'll look for a marketable property. So what's the biggest pool of people that would buy that property? When those number of people or a certain segment disappear, then we'll probably tighten some guidelines a bit. Now, we're not first to jump back in and time the market. However, we're typically somebody who will understand the data to squeeze it a little bit in the beginning. I mean, our guidelines are fairly simple. So, I mean, we just cut back on loan to value when we're struggling with a certain segment.
Yeah,
right?
Fair.
Yeah.
And, it kind of leads me in like my next piece is just around exit strategies. Like when we first started brokering and doing a lot of private lending, it's like the lender just wanted to know what's the appraisal, where's the loan to value, and how are we getting our money back? Do you still put a significant emphasis on exit strategy, or is there more that you're looking at now? Like, considering that this deal might renew and, what is the ability to actually make the payments?
You nailed it right there. So we don't calculate any debt servicing, but the story needs to make sense and how are they going to make these payments?
Yeah.
I mean, to be honest, it's in every broker course as well, as making sure people can cash flow this mortgage, and not having a job or saying future potential to get a job sometimes isn't it. And we may pass on some of those in this type of market, right? Because we know we're just pushing a problem a year out.
Yeah.
Right.
I mean, we've talked about this a lot, but like back in the day, it quite literally was send in an app, bureaus, appraisal, and like, here's your approval, and it funds, right?
Correct.
Now, like brokers need to start thinking, obviously you don't need to go as deep paperwork wise as a conventional deal, but you need to get the same amount of information about the clients, about the property, about the exit, about the money that they have accessible to make payments, right? And like, if you're not doing that due diligence and you're just submitting files to privates with bare information, I can only imagine that's getting pushed to the top of the pile, or you're just not going to fund it because you don't want to spend the time asking 15 questions when another broker's giving you a clean deal with all the information up front.
Absolutely. I mean, I don't have much else to add to that because that's the ideal world. Now, having a consistent story versus just letting us know what you think about the borrower when we ask a question in the beginning is key, right? Especially what do they do for work? How do they cash flow over this? It doesn't match, right? The basics of it is you could do a Google search of a borrower, and a lot of times you find out where they work. Yeah. And if it doesn't match with an application, of course, underwriting's going to have a question. They're there to protect our investors, right? So
yeah, like looking at this FinTrack regulation that we've been, working through all year, there is an onus on us as a broker to, verify what this person is and what they're saying they do for work. And is it, illegal, what have you, right? These are, requirements that we have to put together even before submitting the file now. So you would think that like us as brokers and the broker channel in general is becoming a lot more sophisticated and a lot easier to deal with from a lender perspective. Do you see any appetite of bigger investors coming into the portfolio because of, just an increased level of sophistication, better due diligence?
Yes and no. Time will tell with that, but investors expect you to already have that.
Yeah.
And especially when you've been around like us for over 30 years, you better be ahead of the market a bit. How are you going to get to this targeted return? And part of that is headlines are headlines, sometimes not always the news, but how do you combat that? What are you doing? There's those regular meetings that we have with our board, with our investors, and they're going to ask us all these questions. So we need to be ahead of that.
Yeah, fair.
Hey everyone, Dean here. Quick timeout from the episode to share with you the ABW Tuesday Mortgage Memo, your weekly market highlights sent directly to your inbox every Tuesday. This is certainly one you're not going to want to miss, so make sure to sign up now. You can do so with a link in the show notes, or you can head to joinabw.ca and sign up there. This is a high-level summary of market developments, regulatory updates, and housing trends every Tuesday. So hope you enjoy it, and back to the show.
A bit of a segue here just into the behind the scenes of VWR. Brokers submit a file. They're expecting, a response like, hey, they've had it for 15 minutes. Why haven't I heard back, right? Like, oh, by the way, there's a lot going on once that deal gets submitted. So maybe just walking us through, like, what does that flow look like without going too granular? Like, who's touching the file? Where is it going? How is it ultimately getting to a commitment and back to the broker, or, questions on the file back to the broker?
Yeah, it's funny you say 15 minutes. We've had it less time frame in between. So we get everybody wants an update. Everybody wants the quickest response. That's why really our business development managers need to be the first point of contact. So I always say, I don't even need anything in an email. Let's just put an address in a subject line and hit send to, say, Jennifer in BC. We will then let you know if this is an area we lend in and a possible loan to value. Just based on that, because the property is most important to us. Yeah. That can save you a ton of time. Why send in a full application if you're not sure we do this property or not, right? Once it gets in, 24 hours, underwriting looks at it. There's some conditions reviewed. We have our own solicitor. If everything's lined up, we have the borrower's representation, and we get it done. I mean, it's a pretty simple process.
And, looking at like you coming from a credit union and then coming into this space, like it's a much smaller business from a perspective of how many staff and processes and systems are there. I mean, even going back to the early days of private lending, it was like you called the one guy and he just did everything and told you on the phone that it's going to work or not, right? Like now, your BDMs are the point of contact. Is it then going to an underwriter, like a dedicated underwriter, is then taking that file and then communicating directly with the broker at that point? So the BDM's out of the picture, so to speak?
Yeah, so BDM's never out of the picture. However, it is assigned to an underwriter. Is there a dedicated underwriter? Not at this time. However, you get to know the underwriters because we are a small team. So if there's 4 underwriters for all of Canada for us, you're going to get to know them one way or another, right?
Totally.
So,
do you have your underwriters working deals in all the provinces you operate? Because you do operate from BC right through to Ontario. So are they touching all files in all provinces?
No, so it depends on their license,
okay.
Right? So in Ontario, we typically have one person right now that does the Ontario deals just because of licensing, right? So we will, as we hone in more on our relationships, our partnerships, dedicated you hear that all the time, it would be fantastic. However, the BDM is always involved in the process. They actually have all the knowledge that the underwriters have. Do they want to have that all? I'm not sure. However, if there's an issue or anything that could jeopardize a relationship or is part of a relationship, they're involved. There's a portfolio in the background for both of them, the underwriter and the BDM. So they have a vested interest to ensure that they work together to get the deal done.
How does an escalation get handled? At what point, let's say the underwriter's like, this deal's not going to work for us. Broker thinks it is, but maybe even before that, the underwriter says this is not going to work. Is there another layer before that underwriter can ultimately decline the file before it gets declined? And then let's say, it does get declined and the broker's trying to escalate it. Like, when does it come to somebody above the underwriter to make that decision?
They have a process in place as far as, okay, if this is going to be a decline, we're already a ways through this process, the BDM is brought in.
Okay.
So the BDM is either escalating it to myself. We also have an underwriting manager. We all work together, really. Yeah. And it's not just a matter of, hey, approve this. It's why. We use a lot of data. So even as in the sales team, we'll use some data to show that here's the reason why we want to look at this deal further? Can we look at a different structure, whatever it may be? And that's how we'll escalate a deal.
So looking at that, like, we get these complaints, let's say from our own agents that are, this deal didn't work. I don't feel like it was looked at properly or what have you. And, we always try to dig deeper, like, what options did you try? How was it positioned? What did you do to mitigate some of these concerns, right? When your underwriter ultimately declines a file, before a broker can even complain, should a broker know that, hey, it went through as many steps as possible? Or do you find that maybe something was just missed because it wasn't positioned properly?
I think for the majority of the time, we will make a phone call, say that, hey, here's something that has come up in the process. So there is awareness there. But a lot of times what we see, it's something that wasn't disclosed.
Right.
That's the most common issue, and that's why it's escalated. And as an underwriter, it doesn't matter what company you're at, you get your back up a little bit when things aren't disclosed.
Totally.
And do you want to look at a different structure, or are you just going to decline it?
Yeah.
So that's why bring back the relationship piece and, okay, let's relook at this. Why wasn't it on here? How can we make this work? And then go from there.
I mean, that's great for an agent to know that you're going through those lengths before, the underwriter just ultimately has the pen to say no. Because you're right, like underwriters, this is all they're doing day in, day out. And when something gets missed or they're feeling deceived, and it might not even be that they're feeling deceived, it might be the agent just didn't know one of these items, right? So it's good to know that, you're going through that type of a process. We talked a little bit about risk management, compliance, some of the changes there, you're being ahead of that. I don't want to go too deep there, but I am curious to see what happens post-funding and like how you manage that, especially with, some of the new FinTrack regulations, monitoring, those sorts of things. Like, what is your process, and has that changed at all, given that, you were pretty ahead of that?
Has process changed? Yes. We do have people that walk into our office, even though we're BC to Ontario, and they'll come with a check for $100,000, let's say.
Yeah.
A few days after we funded. And it's, okay, well, they were in a difficult situation before. They had a lot of debt, and it's kind of strange now.
Yeah.
So there is reporting on that now. So yeah, processes have changed for that for sure. As far as monitoring, files and ensuring everything is compliant. We have our regular audits, we have our compliance, we have our regular checks. We look at our book to ensure that it's stress tests, like all of that stuff is already in place, right? So.
Yeah. Now, looking at technology, you mentioned technology is something you've been focused on, tools and innovation. AI has become such a big piece of this. Where are you going with that? And, what's in place now and what's to come?
Yeah, it's actually mind-blowing when you look at it, of all the things you could do and want to do. I still think data is the most expensive thing in the world. Technology helps you sort that. If you get too deep into it, you can go all over the place. So I always say you can be data informed, and then you need the technology to back some of that up. So we have systems in place now. We are starting to integrate more pieces of it. For an example, have an API coming in from your newsletter platform into your sales system, so you can monitor that better. AI, if you're not using it, you're behind.
Totally.
You're also wasting time.
Yeah.
Right?
Yeah, totally.
Yeah. So we encourage all of our staff. We have licenses with some of the platforms, and we encourage them to use it. And it's not copy paste. It's, hey, if you're struggling with something, type it in.
Yeah.
It'll give you an idea, and away you go, right?
And do you see AI coming into the underwriting or credit side of things at all in kind of your vision, your plan?
For sure. We're talking about it. Is it next step? It's on the roadmap, I guess I'll say.
Yeah.
It's tricky because you need to build up the trust in whatever system you use, whatever AI you use. And it's tough when you have investor money behind it. That's ultimately your goal, to allow for a non-human to touch some of the deals. You kind of want that check, right? I think there's pieces for sure. If you look at deals under 50% loan to value in a market area that you've clearly defined by postal code and you can map it, is that something you can implement with AI? And all? Sure, you probably can.
Yeah. Yeah, that's a good point. It's like, it's overwhelming. We talk about this day in, day out about AI, what's coming, whether it's one of the technology companies that we work with today, what they're working on, what to expect. It is overwhelming, and it's changing so much day in, day out. I'm just curious, from a lender perspective, anyone in business, to be honest, how are they prioritizing it? And, how are you working through the noise, so to speak, right?
I'll give you one example of something we're implementing. It should be out this week. Our lending areas and where we lend probably isn't defined the best online. We list some cities, we list some appraisers. So we've partnered with somebody to build us a map, has every city that we can think of that we lend in with our max loan to value. You click on it, has your max loan to value, has your appraiser, has your BDM name, everything's there.
Oh, wow.
So next phase of that is, can you build out boundaries?
Yeah.
and you build out by postal code and really hone in on the areas that you lend in, right?
Yeah. I mean, that's great to hear. And like looking at that, it's a rule of thumb, just more of an urban center and try to stay away from the rural parts of the country.
Yeah. So, I mean, urban neighborhood setting, sure. We do a ton of inter alia though. So I'm not going to say we'll never go rural, because we actually will take your rural property, tag your home in the city, and get you first mortgage pricing.
Fair.
We do that a ton.
Yeah.
So it's not a be all end all and then leave the site. So that is a risk to having more information on the site too.
Yeah.
Right.
I see. That makes a lot of sense. Broker lender dynamics. We'll touch on that for a bit. Communication and support. Like your BDMs are quick to respond. How do you prioritize that from a leadership culture perspective? Just ensure communication is there, and what are some of the things you do to ensure that?
Well, I mean, it's part of the hiring practice, to be honest, but we have service standards. We have communicated that. All our sales team know the importance of answering that phone call, returning that email as quick as possible, because if we don't, it's gone.
Yeah.
Like it's just proven to be gone. So is there a balance? There's a balance for sure, because on long weekends, for an example, on Mondays at night, you start getting a ton of phone calls and emails.
Yeah.
Everybody's gearing up for tomorrow.
Yeah.
Do we answer those? There's no expectation to. However, we have, right? And what that does is really show that we care, we want this business. And how do you balance that as a salesperson? Well, you're flexible with your time, right? You can have your own time when you need it, right?
Yeah, and it probably plays a lot into like a relationship strategy as well, right? Like there's certain agents you receive deals from on a regular basis. Those people I would imagine are going to jump the priority stack. A lot of people maybe in the industry don't want to hear that, because maybe they're, trying to reach out for the first time, but it's just the nature of it, right? So like, you may not have a deal for VWR, whoever the BDM is in your territory, but it would be a good idea to get to know them and prep for when you do have a deal, so they do know you and they do want to work with you. Because I would imagine, especially deals on a rush basis, those are probably the ones that missing information pops up, fraudulent concerns. Anytime something's being rushed, it's human nature as a decision maker to take a step back and say, hey, let's make sure we look at everything here like we normally would. A rush file will be treated a lot differently, I would imagine, on somebody
100%. So when we have partnerships, we know the broker. Those are the ones that go to the top.
Yeah.
The first deal submitted typically isn't, unfortunately.
Yeah.
Especially if there hasn't been a conversation with the salesperson.
Yeah.
With a BDM. I mean, it's just been proven time and time again is those typically lead to some red flags at the lawyers as well too when you get there. So
Yeah, no, it makes a lot of sense. So, I mean, that's just a good tip for, I think, agents, especially agents looking to, start to diversify their private lender portfolio. Looking at private lenders, especially in BC, there's some that, maybe don't have capital at all times, because they're not as large as a VWR. So maybe they're in, maybe they're out. And, starting to diversify your list of lenders that you want to work with, I would identify that immediately and reach out to those people and start building relationships, whether you have the deal or not. So kind of as we look to wrap, I just want to touch on the client borrower insights. And what I mean by that is, when you get involved dealing directly with the borrowers, you mentioned, sometimes people just pop by with a check as an example. What we found with maybe inexperienced brokers or brokers that, do private transactions for the first time, they don't stay in touch with their clients after funding. The good ones, of course, do. It's part of the plan. How are we going to refinance? Where's the exit? You're supposed to be managing that relationship and that transaction ongoing. But the reality is that doesn't always happen. And the reality is borrowers just randomly reach out to you and pop by. So what's your kind of cadence with borrower communication, and how do you manage that?
Yeah. So our largest team at VWR is our administration team. So they are separated into, we have renewals, we have your payouts, we have your mortgage recovery, your collections, and there is certain touch points, especially on the renewal piece. I mean, there's the standard touch points for calls, emails, and to ensure that we walk them through the process. Now, would it be ideal if they knew everything up front and there were no surprises? Yes. However, the response time for our admin department, I would put up against any other company. So they're almost instant. If not, it's 2 hours or less is kind of what their service standard is. And we maintain contact, and we will help people even through tough situations, right?
Yeah.
So to ensure that they can either stay on their home or work their way up to a B or A lender. So we're involved all the way along in the process.
And, just thinking of that, back to perception, the general public, they think these private lenders are just a guy with a bag of money and just there is no structure or support like that. So, I think it's reassuring hearing it's just professionalized. Just the private lending channel is far above where it was, let's say 15 years ago. But where can a broker help reduce maybe some of those pain points? Like, and do you find that there's certain brokers that are doing a better job in those areas that reduce, kind of the inbound on your team?
Yeah, so I get how there's a lot to go over during a process of getting a mortgage done. There's just something super simple that can help with all these situations. It's what do you do after the sale?
Yeah.
We have a simple sheet on our broker package online as well too, which is here's the contact numbers for renewals. Here's the contact numbers for if you want to look at your payments. Just who can you go to and when to make it easier. Have that peace of mind knowing I'm not just forgotten. I have no way of knowing how to get a hold of this person. So if the broker goes away and doesn't help that borrower anymore, they still want to know, how do I get a hold of them? What can they do? Right?
Yeah, I mean, that could be a great piece of an agent's process to, one, back to building that relationship. These are the types of things you can learn before you have that deal and where to access them. And then, you think of client experience and why is this client using this agent? Maybe a follow-up strategy post-funding, like, hey, by the way, here's all the resources, here's this, here's that. One, you're creating a way better client experience. The client's informed. They're going to feel better about that. And you're going to just, have a much better relationship with your lenders because your clients are well informed.
We want the borrower to go back to the broker. We do.
Yeah.
Right? Get that advice, do what's right, because there's just certain things like we're not going to just refinance with a borrower ourselves.
Yeah.
We need the advice, right? So we rely on our broker partners to have follow-up sometime, but if not, we do have people to help support.
Excellent. So, looking at just future outlook and wrapping this discussion up, what are you watching closely today from industry trends, just anything that could impact or, make you need to pivot your strategy, your vision, everything?
Yeah, I mean, rates are a big piece of this, right?
Yeah.
So as the rates drop, you do need to ensure that you're still having the right spread, the right margin. So is there ways to diversify your product even, right? Is there other products you can add? So I would say we're always on top of the data, the technology, and ensuring we stay or get above the market. So it's just a matter of protecting what we do have as well, too.
Yeah.
Right? So future, we want to grow our fund, but we don't want to be a bank. We don't want to have 100 employees. We want to remain a relationship building, strong local company that you can go to for our product that we do offer.
Excellent. And any advice for brokers that, are looking to adapt, maybe, remain competitive and just build their resilience, because it's coming at brokers from all angles, especially on the prime side?
Advice, reach out to us, book an appointment with us. We'll help you through it, right? It's just a matter of just some education sometimes, and it's so hard to keep up with every lender, right? Yeah. Having a preferred partner, having somebody that if I have this deal, we're there for you. We can meet you wherever you want, and really just disclose everything up front.
Yeah. I think just like you made a key point there is just partnership. It's like, we have that with you and it's a great relationship. You're there for us from a education perspective, whether we're doing a training call, BDMs being available to share those resources. And again, your website does have a lot of resources on it. So for anyone listening, like if you don't know VWR or, you haven't really checked it out, I'd highly recommend it and implore you to get involved and understand what they're doing and how they can serve your clients. That's pretty much a wrap for me. Any final comments from your side or anything, maybe we didn't cover?
No, and I just appreciate our partnership, and I know we'll learn and grow together as well too, and really just reach out to us anytime if you have questions.
Awesome. All right. Well, thank you, Steve. It was great and appreciate you coming on today.
Thanks, Dean.
Thank you for tuning in. If you found value in this show, please subscribe to our channel on your preferred platform. We're available on Spotify, Apple Podcasts, and YouTube. Your support is incredibly appreciated. We also welcome your reviews and feedback, which are crucial in helping us deliver outstanding educational content. Feel free to share your thoughts. A 5-star review would be fantastic if you think we earned it. Lastly, a vital announcement about Backpack Buddies, our chosen charity for 2025. This remarkable organization addresses a hidden hunger issue many are unaware of in British Columbia. While school districts provide meals during school hours, numerous children face food scarcity at home, particularly during the weekends. Backpack Buddies steps in to support these vulnerable children, ensuring they have easy-to-prepare, familiar food for weekends. This is achieved through collaborations with schools and an extensive distribution network. Your contribution can make a significant difference. With just $20, you can give a child in need a food bag from Backpack Buddies filled with enough meals and snacks to sustain them over the weekend and more. Once again, thank you for listening and see you on the next one.